Welcome to today's cryptocurrency news. Cryptocurrency prices today. Today, the crypto market saw a slight decrease in the price of Bitcoin from 20,116.66 to 20,026.36 USDT, a decline of 0.45%. Ethereum experienced a slight increase, rising from 1,414.7 to 1,424.43 USDT, a gain of 0.69%. Lastly, Binance Coin saw a notable increase, rising from 272.0 to 277.3 USDT, a gain of 1.95%. Latest news.
Nigerian president-elect aims to use blockchain technology in the banking sector. Nigerian president-elect Bola Tinubu has recently released a manifesto that outlines plans to reform regulations on digital assets such as cryptocurrencies to make them more business-friendly. The new regulations will require digital asset companies to register with the Security Exchange Commission (SEC), and mandate that all digital asset offerings and investments comply with SEC regulations. Additionally, the manifesto seeks to expand the adoption of the Central Bank of Nigeria's e-Naira, the country's central bank digital currency. The proposed reform to SEC regulations is expected to attract more investors in the digital and economic sectors and stimulate economic growth. Nigerians' increasing interest in crypto assets is reflected in the CBN's milder position toward stablecoins. Meta, working on text-based decentralized social network codenamed P-NER. Meta, the parent company of Facebook and Instagram, is reportedly developing a new text-based content app, codenamed P-NER2. This app will enable users to log in with their existing Instagram credentials and will adhere to the company's current privacy policy. P-NER will also have a supplementary privacy policy and terms of service to specifically address cross-app data sharing. The app will include features such as tappable links in posts with previews, user bio, username, verification badges, images and videos that can be shared. Meta is looking to take advantage of the growing trend of Twitter users seeking alternative platforms and is currently in the process of developing the app. Silicon Valley Bank shuttered by state regulators. Silicon Valley Bank, a state-chartered commercial bank and Federal Reserve System member based in Santa Clara, has been taken possession of by the California Department of Financial Protection and Innovation due to inadequate liquidity and insolvency. The FDIC has taken receivership of the bank, and all deposits are federally insured by the FDIC subject to applicable limits. Following the closure of competitor Silvergate earlier this week, Silicon Valley Bank had a number of crypto entities as clients, including hedge funds and VC firms. The closure of SVB has caused other West Coast lenders, such as First Republic Bank, Western Alliance Bancorp, and Signature Bank, to move lower in the stock market. In response to the news, the SP 500 is now lower by 0.3%, and Bitcoin is little changed at just above 2,000 yuan. In a statement, the California Department of Financial Protection and Innovation announced today the closure of Silicon Valley Bank due to inadequate liquidity and insolvency. All deposits are federally insured by the FDIC subject to applicable limits. The closure of SVB has caused other West Coast lenders to move lower in the stock market, while Bitcoin remains little changed. Signature Bank stock down 12% in volatile action as bank sell-off continues. Today, banks with close ties to the crypto industry are feeling the effects of the collapse of Silvergate, SI, with Signature Bank, SBNY, shares falling as much as 30% in early trading. Other banks, such as SVB Financial Group, SIVB, have also seen significant drops, with their shares down 4% on Friday and 8% for the week. The Spider SP Bank, ETF, KB, is down 4.3% today and 10% for the week, and the four largest banks in the U.S., JPMorgan, Bank of America, Citigroup, Wells Fargo, have lost a combined 52.4 billion in value on Thursday. The banking sector is facing volatile trading as investors grapple with the implications of Silvergate's collapse. On-chain liquidations beckon as Ether slumps to toe month low. The price of Ether has dropped to a 2-month low, putting 199.3 million in on-chain positions at risk of liquidation. This is in addition to the 40 million in derivatives positions that were liquidated on centralized exchanges yesterday. The sliding equities and regulatory clampdown on crypto have caused the price of crypto assets to spiral downward, with Bitcoin currently down 7.35% in the past 24 hours. Blockchain.com Shutter's crypto asset management arm less than a year after it launched. Blockchain.com has announced the suspension of its asset management arm due to the prolonged crypto winter. The company cites challenging market conditions as the reason for its decision, which comes less than a year after the launch of the service. The company has submitted an application to be removed from the UK Businesses Registry and is expected to close the subsidiary on March 4. Despite the closure, the firm has seen numerous milestones in the past year, such as registering in multiple countries, signing a custody deal with Anchorage Bank and other trading platforms, and working with Visa to develop a cryptocurrency card in the US. Replacing Silvergate's network is a challenge for crypto industry, JPMorgan. The collapse of crypto bank Silvergate and the termination of the Silvergate exchange network has posed a challenge for the crypto industry, according to a research report by JPMorgan. Replacing Silvergate's instantaneous network for processing dollar deposits and withdrawals among crypto market participants is difficult due to the current backdrop and the reluctance of traditional banks to engage with crypto companies. Some customers have already migrated to Signature Bank, however, its capacity to replace Silvergate is limited due to market and regulatory pressure. The entry of new depository institutions seems unlikely at present due to the heightened regulatory scrutiny of cryptocurrency risks. This lack of options for institutional crypto investors in the US may lead them to seek banking services in Europe or elsewhere. Ethereum co-founder Vitalik Buterin dumps altcoins worth $50 that have no moral value. Vitalik Buterin, co-founder of Ethereum and blockchain pioneer, has sold off 0.9 billion cold tokens, as well as his Byte and MOPS holdings, for a total of 2.30 Ether. Buterin made the decision to liquidate his altcoin holdings due to their lack of cultural or moral value. This follows Buterin's 5 billion token burn of Shiba Inu tokens in 2021, when he decided he didn't want to have the power of holding such a large amount of the token supply.
Thank you for watching today. Wishing you all the best in your cryptocurrency investments. May you reap the rewards of your hard work and make a lot of money.